Because even when you reduce interest rates and banks hold on to the liquidity they have, which they always do, we've reduced the CRR from 75% down to as low as 20%. The money didn't go to the private sector in terms of increased lending because the government was always there to borrow. And as long as the banking system knows that the government would come to borrow, they would never make available credit to the private sector. That is just one leg of it. The second leg of it is that what is the cost of borrowing? This is the key argument the banking system puts forward, that the cost of borrowing, the cost of doing business for them is extremely very high. They've got the resources, the deposits they have now, the time deposits they have, they've mobilized it at interest rates that are much higher than what the NPR is. So a further reduction in NPR isn't going to be, it's not going to be any good for them doing business. But more fundamentally, if you look at inflation, inflation is within the range of 18%. You can't keep on expanding negative real interest rates, because these are the fundamentals that everybody looks at. Right now, as we talk now, real interest rates are negative. And that's sufficient to discourage any form of investment in the country. It's sufficient to discourage it. So when in a situation where you have negative real interest rate, what you always try to do is overcome the negative interest rates first.
Mr. Tule, if I could butt in a bit, just hang on a minute, if I could butt in. Well, first and foremost, this clearly shows that, there's that, you're not on the same page, the CBN and the Ministry of Finance on this particular matter. But when you make that comparison between England and Japan and Nigeria, there are many who say, wait a minute, they're not exactly sure if that's appropriate. First, is government biggest spenders in those economies, and what are the similarities between their economy and ours? Ours is coming from specific demands. Manufacturers have complained about high interest rate. Now the ministry is talking about high interest rate. So many people talking about, look, if you have this high interest rate, it doesn't help us. But you don't, and the CBN doesn't seem to see that as a valid request. Remember, even governors are saying reduce the interest rate.
I'm not sure that's correct. Sorry, sir, I'm not too sure that's correct. If you look at the governor, the very first address he gave to the nation, the governor of the central bank, he clearly indicated that he was pro-growth. And then he started running back to...
I'm sorry, which aspect is not correct?
If you look at the MPs, the very first 2 or 3 or 4 MPs, or 2 MPs which he chaired, he ensured that he worked towards low interest rates. But it's fundamental, it's very, very fundamental, that even as the central bank tries to say, okay, we're going to reduce interest rate, we're going to reduce CRR, and the market is not responding. And then secondly, let's get out of this mode of saying that the Nigerian economy is peculiar. It's very, very peculiar, very, very peculiar. There's nothing too peculiar. The laws of economics are essentially the same. What you could tell me is that in Japan, in the EU, or in the UK, that inflation is extremely very low. That's completely accepted, and that's what makes the recession in Japan different. That's what makes the recession in the EU different. So they can afford to reduce interest rate because they are addressing a recession. But when you are looking at stagflation, there is no quick fix. And I am not saying that the central bank is not looking at what fiscal policy is. And what I am saying is that the policy mix must be more comprehensive than what is on the table now. All the key policy parameters must be brought to the table, and the key dramatists person must sit down together to fashion out what is the way forward for the country. So it is not for fiscal policy to act alone, trade policy to act alone, budget policy to act, and the central bank to act alone. There must be that comprehensiveness in the discussions as to the way forward. That's the point we're trying to make in this case.
Let me button again, if you will. I mean, what aspect of what I said is not correct? Because is it that manufacturers, or is it that some governors, or is it that people are not clamoring for a reduction in the interest rate, or is it the similarity? Because, I mean, we're an import-dependent country. Those countries you mentioned are not. What aspect of what was highlighted is not correct?
What I'm saying is, first of all, what is the economic data saying? The economic data is telling you that inflation is at 18%. A further reduction in interest rate is going to increase money supply. An increase in money supply means higher inflation. And does the government have the resources to increase salaries when there's higher inflation? The answer now is no. Secondly, manufacturers, everybody is clamoring for lower interest. The central bank itself is clamoring for lower interest rate because the central bank has reduced interest rates in the recent past. And we've seen that go back and read the communique of the Monetary Policy Committee where we consistently say that we've not seen that response in terms of growth in credit. I mean, it's very clear. And we should also know that the current inflationary trend are not strictly monetary policy induced factors. They're not strictly monetary policy induced factors. Some of them are from legacy factors that have arisen as a result of reforms, the reforms that have generated the current trend in inflation. First, reforms in electricity tariff, reforms in the fuel petroleum pricing model. These are part of the reforms that have created the current trend in inflation. And of course, reforms in the foreign exchange market. If you put all this together, they had the capacity to increase price levels by about maybe about 100 basis points.
Let me come in here, Mr. Chuli, let me come in here and take off from where Chamberlain left off, and it has to do with the issue of stagflation, which you also mentioned that the United States had seen about too. Don't forget that the UK also witnessed it, but they were able to get out of it based on the interest rate that was really, really low. But the way you've just analyzed it, you say our interest rate can't be any different because it doesn't work in other economies. Why don't we give it a try and see how it goes? Because almost everyone is still looking at it because you have that interest rate drop to a single digit perhaps. You have more people who get access to such fund and, well, jumpstart the economy with a lot of activities, especially from the manufacturing sector and even those who are importers.
Please, may I make this point very clear? The central bank is not averse to low interest rate. And as I've said again, if you look at the communique of the Monetary Policy Committee and the voting pattern that's been there and the explanations we've given, we've consistently taken the decision that, look, we need to have low interest rates. And if you look at the data, we've reduced the CRR from 75 to 20%. That was with a view to making more money available to the banks and for them to lend to the critical employment-generating sectors of the economy. But an economy does not deliver low interest rate if it has key structural deficiencies like infrastructure. These are key constraints to the economy. And for the Nigerian economy, you cannot compare the infrastructural level, those structural deficiencies in this economy with what you have in the UK, in Japan, or in the United States. If the UK went through a recession, which they are still going through and which they are not completely out, Japan over the last 10 years has been struggling with the recession. The EU since 2007, 2008 global financial crisis is going through the recession and they are not yet through. And they've put all the policy arsenals, deployed all of them to work. Yet the responses we have seen are very slow in coming. Then, for an economy like Nigeria, where there are key structural deficiencies, there's an urgent need to harmonize the policy reaction, the policy menu that would address the stagflation the country is currently facing.
I'm afraid that we have to take a moment now. We'll come back and discuss that point a little further. Sunrise Daily will continue in just a moment. Do join us again.